So thank you so much for being here today with us. You may remember when I was talking, I mentioned that you're going to be surprised by the new models, the new business models that are out there now that make it much easier to operate and afford a microgrid. These three people are going to tell you about one of those models. So this team is starting with an initial investment of $500 million, and that's not capped, that they're bringing to the microgrid market. So financing is part, but not all, of what this partnership is about. It's bigger and goes to a rethinking about how we manage energy ownership and operation. When we were talking earlier, Karen Morgan summed it up like this. I thought this was really interesting. We're in the excuse removal business. So let's find out exactly what that means. Okay, so let's start with Mark. So tell me a little bit about Schneider Electric and the company's role in microgrids. You've been doing this for a while now.
Sure, absolutely. So Schneider Electric is a global leader in energy management and automation. We're headquartered in Paris, France, but for those of you here in the Chicago market that listens to Cubs radio, you may know the Square D company. So we've been operating here in Chicago for over 100 years as the Square D company, as well as a whole lot of other brands that we've acquired over time. We've got 43 manufacturing facilities here in North America and over 25,000 employees. Our interest and desire around microgrid really begins with the story of who we are and the vision for our company. And you know, we see a world where 1 billion people still do not have access to energy today, and another 1.5 billion have access to only intermittent energy. We believe that energy is a basic human right, and we've got to get folks on the grid. Life is on when energy is on. But at the same time, those of us who live in established economies are using energy in such a way that it's damaging our planet. So we've got this conundrum. We've got to bring a whole bunch of more people onto the grid, but yet those of us who have to use it much more efficiently. We believe that microgrid is a killer app in attacking that equation.
I'd agree with that. So when you were at our conference 2 years ago in New York City, and at that time, one of the big problems, probably the biggest obstacle, was financing. Is that still the case? And if not, what's changed?
Well, sure. I think what we've really seen since since our time a couple of years ago was a word, the importance of a word maybe that was repeated a bunch of times during the last session, which is risk, because you know, this is not just a story of where does the money come from. It's a story about transforming the role of the consumer. I mean, imagine this facility 20 years ago if we wanted to add on another, ballroom like this. The hotel, Lowe's Hotel, didn't have to worry about where the generator was going to be sited or if they picked the right kind of generator and what about the fuel and how many poles and how many transformers and all those things. That was all taken care of by the utility. You know, the customer was somewhat passive and they simply received that. But when we talk about delivering new outcomes through microgrid, we talk about putting equipment and technology on site. And that equipment matters. Technology's changing quickly. The regulatory landscape is changing quickly. Options in the energy market are changing quickly. You know, these are all things that now must be addressed by a consumer that may not be prepared to do that. And so when you think about money and risk mitigation coming together and delivering a business model, I think that's the biggest thing that I see building around this arc that we've been on.
And what you're calling it, what you're offering now, is called energy as a service.
That's right.
And tell us what that means.
Yeah, energy as a service is really just a story where we take that complexity and we think about those risks, and we have a conversation with the consumer and really get to the bottom of, what do they desire with respect to energy costs. It's not always just the lowest cost. Sometimes more predictable costs we found are huge drivers for these. Sustainability and resilience. Now, in the past, those things couldn't always be handled or optimized at the same time. If you wanted resilience 10 years ago, you're probably going to do that at the expense of sustainability and cost because you're going to put diesel or some other solution in to go do that. In modern microgrids, as we think about these now, when you use renewable energy as that core asset of the microgrid, delivering a balanced outcome is possible. And it begins with that conversation with the consumer. What are the goals around sustainability, cost, and resilience? From that, is a technical solution. But from the technical solution, you must wrap, all those risks we just talked about and think about those implications. And having that conversation with someone around what are you prepared to take on, what are you prepared to own, and where do you need help doing that? Energy as a service is the function by which we deliver those outcomes that we've all discussed and agreed upon.
So how do you know if this is the right solution then for your business?
As a consumer?
As a consumer.
Yeah, it's really to the extent that you can quantify, what those things mean to you. Once again, last session, we heard some conversations, what does an outage mean now versus in the future? But it really, as you become an energy consumer and as you invest in understanding your energy consumption, what are the correlated variables, what do I care about, what do I want to hedge? As you increase that, you become more, let's say you have greater situational awareness on what you want. So I think a company that has determined what outcomes around sustainability, resilience, and cost are important to them, that's when you really can decide, who do I want to work with to go achieve those, and how might energy as a service be part of that?
Interesting, great, good, thank you. Okay, let's turn now to Andrew. So the Carlyle Group is one of the world's largest infrastructure investment firms, one of the largest investment firms. And your end of it is infrastructure investment. Tell us a little bit about what you do at Carlyle, what Carlyle does and what you do at Carlyle.
Sure. So Carlyle is one of the largest private equity funds in the world. We manage about $200 billion across funds in 19 countries, 31 offices. We have a big operational presence globally. We have about 260 businesses. And we also employ a lot of people. We employ over 100,000 people in the United States. We're one of the largest employers in the United States. So what do? We manage primarily pension fund money.
Okay.
And we invest that money in what we call our alternative assets. We don't invest in the stock market. We invest in private businesses or private real estate, private energy production, other things like that, to achieve better risk-adjusted returns than most people can get in the public markets. And by doing that, we shore up the returns for people in their pension funds and help them retire.
Good, very nice. And so tell us a little bit about what kind of infrastructure investments that you do, that you're looking at.
So we're focused mostly in the United States. We think that actually we're in sort of the golden age of infrastructure in the United States. Why? A lot of really simple reasons. First of all, the infrastructure in this country is horrible. I don't need to tell all that. The rail system, the airports, the electricity grid, it's all in need of a significant upgrade, particularly as you think about comparing us to our peers in other first world countries. Secondly, we've gotten to a point where we can no longer finance our own infrastructure upgrades and development as a country. And that, I think, as we have started to see over time, as this country's balance sheet has gotten more and more stressed, the investment in infrastructure has gotten down, and we've sort of gone to the lowest common denominator. We see this as a huge opportunity, not only for our investors, but also for the country. And the way we really focus on it is we don't focus on specifically buying assets. We focus on using our capital to deliver outcomes for stakeholders and citizens. And this strategy fits right into it. So our whole investment strategy around microgrids, and really the strategy is much broader than that, as I'm sure Karen will get into, it's delivering cleaner power, more transparent sources of energy, and greater resilience to communities and customers, help them solve a lot of their resiliency and cost needs. It's something, the market is going there, it's gonna happen. It is a trend that is identifiable by everybody in this market, in this room, regardless of what you think the impediments are. We're just helping that move along, and we're happy to do it.
So, but microgrids are still, I mean, we're all big fans of microgrids here and very bullish on the market, but it's still a pretty small industry. And what are you seeing? You're a big player, and here you are in this small industry. What are you seeing in microgrids?
We're seeing a ton of opportunities, actually, and it is happening almost across every sector of the economy. Airports are a big area. 2 years ago, you didn't think about energy resilience in airports. Now, It seems like every other month there's an outage that costs a lot of money and really endangers lives. So we're involved in a lot of airport opportunities. In fact, Karen and I were working on one that very big opportunity where the inclusion of resilient, sustainable energy was critical to us getting the development rights to doing that airport. In fact, if we didn't do that, we wouldn't have gotten the deal.
Interesting.
That's incredibly important. We're seeing that across the economy. Amtrak has had a number of RFPs out for resiliency. They've got a lot of other problems. Military bases, communities, and even utilities are now thinking about how to augment their business models behind the meter using flexible sources of capital and new technologies, and really partnering outside of their traditional model. So this market is moving. It's moving incredibly rapidly. It's innovating very rapidly, and I'm incredibly excited as a citizen of this country to watch it all sort of unfold.
It's interesting. It seems almost like resiliency is sort of becoming the new green. What green was, everybody was pursuing green. Now they're pursuing resiliency, or as well.
Well, it's all the same. I mean, I absolutely agree with Mark. You know, it's clean, resilient power is a basic human right, certainly in this country. And so let's just get on with it and fulfill that need. Right. It's going to happen, so let's do it.
So tell us about what unique tools Carlyle brings that will help us accelerate the microgrid market.
Well, we bring a lot of capital, number one. So all of the conversations that you heard in the last panel about what's it going to cost and what people pay for it, we'll to say right now, we'll take care of that. So we will own and operate and finance and take all of that on balance sheet. How do we do that? We don't do it ourselves. I mean, the only way Carlyle really does anything successful is by partnering with really smart people. And I've got two of the best partners in the industry right up here with me. And we essentially listen to them. We help them fulfill their business models in a way that economically makes sense and use our capital to provide that discipline and to sort of fulfill those build-outs and contracts.
I was going to ask you why you partnered with these two people here, these two companies, and I guess you just answered that question.
I mean, look, they are two of the best innovators, in our opinion, in the market. Mm-hmm. In terms of an entrepreneur that's been in the renewable space, that has built her own businesses throughout her entire career, and one of the absolute best innovators and technical providers of microgrids across the world. I can't imagine a better team than that.
Mm-hmm. Good, okay. So Karen, let's talk to you for a minute here. So Dynamic Energy Networks is relatively new, but brings an impressive team to the table. Mm-hmm. Tell us a little bit about DEN, that's DEN for short, and your team. Introduce us.
Thank you. So Dynamic Energy Networks is an investor, owner, operator of energy infrastructure. And yes, microgrids are a key part of that, along with distributed energy resources and the integration of those things plus other things. And we'll touch on this a little bit later, but we view energy service contracts and long-term contracts for production as being integrated overall. And what we're able to do, and Andrew mentioned this earlier, is provide flexible solutions that transfer the risk away from the customer, essentially onto us, the owners of those systems. And it's also really important to note that when we built this platform versus the previous platform, which was also an aggregator or investor in renewable energy, is we needed domain expertise, because this is a much more complex market. And we believe that that has phenomenal opportunity. It requires the best in class in terms of partnerships, and that goes deep into technology and design and also flexibility around capital structuring.
So what then does Carlyle's backing bring to your company?
I can't think of a better partner. I've raised a bunch of capital in a bunch of different ways for previous businesses, and Andrew and I got to meet each other when we were actually selling our last platform. Oh. And he asked me, well, you know, where's the market going? What do you want to do next? What should we invest in? And you know, the electricity markets are shifting in many ways, just like other industries. So we looked at those industries as good proxies for growth and how that happened. And telecom and computing are two examples of that. So where there was really explosive growth, it's through this sort of network effect. And being able to execute on that model with flexible capital, but also 30 years of experience in energy infrastructure investing. So it's not just about a PPA or an ESA, it's about tying it into a concession agreement, long-term contracts that are coterminous with other aspects of the facility. Andrew mentioned airports. So we essentially are underneath a multi-billion-dollar investment. We're probably 100, 150 million of that. But that's a pretty big number for a microgrid.
It is a big number for microgrids, absolutely. And I'm interested in your background in renewables. I'm curious how that informed your work, your thinking about microgrids.
Yeah.
Renewables to microgrids. What's the connection? What's the path?
Well, first of all, how we formed the first platform was finding the best people in the industry. So the domain expertise in that case was also very important, but it was a slightly different model because we were buying single assets. And we were doing it during a kind of frothy time. It was really pre-YieldCo. We were early into that YieldCo market. And when that market crashed, part of the reason it crashed is solar prices went down, there was much more decentralization, the digitization and the impact on the market, the Internet of Things, all of these things were sort of macro elements into where are the electricity markets going? And how do we help transform and drive that to a place where we're good citizens, we're good stewards, we're advancing the market in a way that is efficient, and again, removing the excuses from whether it's the trustees at a university where they think they know what they want to do, and they think they want to deliver a solution on campus, and then they think about their broader community, and then they think about the fact that there may be a hospital associated with that, and what are the opportunities for them to benefit from implementing a solution that is, over time, going to deliver great value to them in terms of resilience, sustainability, predictable pricing and power. Also, revenue sharing, which again is what we do really well. We sit down, we ask a lot of questions. We ask questions like, what do you mean by ownership? They think they want to own something. And it turns out what they really mean is they want governance and control. And oh, by the way, maybe they do want their alumni or their endowment to participate somehow. So we're able to figure all that out. And that's the benefit that, that we pull from mature markets where Carlyle has structured many of those deals before.
So a lot of flexibility is built into it as a result of this
Huge
partnership.
Flexibility and transparency. And transparency is probably the most important thing.
Okay.
And that's also the foundation of good partnerships. So, we have an incredibly great partnership here. We also, particularly I think Schneider and Dan, look out into the audience and we see other partners that we know we want to work with and are working with. In your case, you've been working with many of them for a long time. And that's because we bring different things to the table. And we try to do it in a way that's, frictionless. It's not always frictionless, but that's okay because if we're good partners, we are solving the problems for the customers and the markets, and that's advancing it for all of us.
So I think you used the word co-opetition,
Co-opetition, yeah. I'm kind of a believer in it in a brand new market. New markets need it. Part of our job, our responsibility is to make sure that we're driving this transformation in a way that it is sustainable.
Good. I wanted to drill down a little more into the energy as a service idea. I think that we're all kind of familiar with the concept because we're familiar with solar PPAs, we're familiar with energy performance contracts, but it's not really any of these things, similar but not the same. Can you tell us a little bit about similarities, differences, what?
Yeah, so historically, energy performance contracts, or I call that sort of 1.0 of the evolution of the market, and very useful in terms of savings opportunities, but it's a consumption model, and it doesn't take the risk away, and it's a debt type vehicle. In the case of what we're doing as energy as a service, which by the way, we can integrate those performance contracts into a broader energy as a service. It doesn't have to be separate or excluded or one or the other. Energy as a service is essentially taking capital from, in this case, Den Carlyle, and structuring in a way that's flexible, that delivers the outcome that the customer needs. And that is an education, but the way we go about it is by asking a lot of good questions and by trying and being sensitive to what not just their short-term goals are, but their long-term goals. Because it's not just about the flexibility of structuring, it's also about thinking about where they want to be in 10 years or 20 years or 30 years, because those are the terms of the contracts. And to be able to think through that with them and be creative around that is important.
So very big picture, very long-term approach.
Definitely.
Good. Okay, so let's see. I've heard you say, I'm trying to think of how you worded this before. I don't want to put words in your mouth, but you talked about the idea that it's not about ROI, it's about IRR,
Yeah,
right?
that
Did I get that
comes up
right?
a lot. Yeah,
Okay,
it does.
explain that to us.
So when we first got involved with Schneider, it was very interesting because, you know, this company's been around for 180 years. They've got 165,000 employees, an amazing company, lots of breadth and depth in different markets. And the way things got sold was, what is the ROI to the customer? And we spent quite a bit of time talking about, well, we don't have to worry about ROI anymore, you know, because at the end of the day, the customer is not laying out a dollar. So it's about the internal rate of return that is required for the investors that are standing behind Carlyle, that are investing in the DEN assets. And what that means is it's a transfer of risk, and it creates, again, a platform which, oh, by the way, can evolve and be modified. So the ROI goes away. In fact, we were joking around. We said, we're going to get a red button, and anytime anybody says ROI, we're going to hit the red button. So it's not the easy button, it's the other button.
Wrong.
And I should mention, in the case of Carlyle, with $200 billion of assets under management, you know, there's this perception that private equity, you know, infrastructure is really expensive capital, you know. And the fact of the matter is, if you've got $200 billion of assets under management, you can pretty much goal seek to the lowest cost of capital, you know. And so there's a lot of sausage making that goes on in the background. But what we are able to do for developers and utilities and others is we're able to say, look, if it's a $100 million project, we're going to take care of that. We're going to write the check for the $100 million project. Don't worry about the rest of it.
Now, it doesn't work all the time, but I think what we try to do really is anchor on electricity prices.
Yeah.
Just something that's very easy, very transparent. Mm-hmm. If customers want more or less, we, as Karen said, we open the books. Mm-hmm. Say, okay, this is what we're paying, this is what you want. Here we can share back and forth, create incentives on gain sharing and other things. But in the end, it helps a customer understand exactly what their costs and gains are over time. And let's face it, in the end, you know, our participation in the system will be finite. We're going to end up owning the whole thing anyway in the end. So it's really a matter of what sharing happens during this period of time, during the de-risking phase of what goes on. I think the market is rapidly moving that way. I think that the time of sort of the black box provider is sort of it's becoming short-lived because this market is a lot of the market really are it's people. Mm-hmm. It's people whose primary business is not, you know, taking energy risks. They don't want to do that. They just want to have a basic service, and that's going to drive transparency.
So they want to teach school, they want to have colleges, classes, or they want to make something in the factory, whatever, rather than deal with their energy. You used a term, if you could define it, black box. What did you mean by that in this context? So the audience understands what we're...
We'll build the system, you pay for it, and we'll deliver the power, and you won't know how it happens.
Mm-hmm. Okay, good.
Non-transparent.
Non-transparent. The old way of doing things.
So Andrew brought up a good point there. It's not just about the energy. It is a lot about education. And what we have coming up right now from elementary school to high schools and colleges is this not just awareness, but the commitment of the young people. They will make decisions now about where they go to university based on sustainability goals. Right. And what are the programs that the colleges and universities are offering. And we three have been in these conversations numerous times where part of our give back, part of their value, is actually creating these environments where the undergraduate programs and the graduate programs are being set up and structured as a result of revenue share opportunities that we're able to establish.
Very interesting.
I was recently with leadership from a top university system, and a point that really came across strongly was this idea that they saw energy as a mechanism for them to interact with their community. They talked about the culture of their university system and how they used energy and how their students were made aware of that, right? Their students were given some insight about it, and they felt that that was an outstanding mechanism to kind of bring that culture out into the community. So some scenario in which it was a black box wouldn't achieve that end. So that was an important consideration when putting together the right kind of solution. They needed to be part of that.
Interesting. Yeah. So another term I've heard all three of you use is that your work involves the art of the possible. So tell us what you mean by that. What is the art of the possible with reference to the energy as a service model?
Well, since Andrew coined that phrase,
another one.
we're going to give him the credit. So go ahead, Andrew.
It means nobody really knows. No, it's well, it's the same thing as being in the excuse removal business. So when we go to a customer and let's say we're responding to a question. For example, a university wants a more sustainable or resilient form of energy. The first thing we ask them is, okay, what does that mean to you? And if they tell us something that seems maybe limited or something that's being constrained by some other point, maybe it's balance sheet constraints or regulatory constraints or some local political constraints, you say, well, if you could do anything, what would it be? And then you get the heads of sustainability and the facility really excited. That's what we love to see. So they start talking about things and putting things up on the whiteboard. And then we take it back and actually try to figure out how to make that happen.
Interesting.
And I will say 9 times out of 10, because everybody takes their own biases and their own lens to their lives and their work, and that's natural. We're all human. This team up here, and from the technology side, from sort of the management relationship side and the capital side, we don't do that. We actually we like innovating. We like pulling things out of the box and trying to figure out how to show our customers that we've listened to them. And they may not work. The things we throw out there may not work, but at least they will get closer to maybe a stated outcome or an aspirational goal for a customer than what they're originally asking for. Mm-hmm. And that's incredibly powerful then when you get into an RFP situation after the fact. Because you can throw out ideas that are aspirational that then a board of trustees or a corporate board or regulator or governor will look and say, why do we love to do that? And then we have another conversation. I think ultimately, one of the things, this is a big constraint on infrastructure development in this country generally, is that 80% of the infrastructure in this country is owned at the state and local level. And it is under the guardianship of custodians that are really worried about taxpayer and citizens' rights, and they should be. But that creates a difficulty in movement because people are afraid of making the wrong decision because these are such important decisions, whether it's energy or water or anything else. And so if you're actually able to partner with people from their perspective, a lot of really cool things can happen. And even if it's a little bit of innovation or moving a little bit across the line, it creates better outcomes and moves the industry along at a much more rapid pace. But you need to be willing to be flexible in your own business model to think about that and take some risk.
We're investing a lot of time and energy up front to be creative with them and think through what are the options that are available? And sometimes that's where you get to, let's start with phase 1, and then that'll be 2 and 3. But back to Andrew's point, the situation that he mentioned earlier where sustainability and the delivery of a microgrid solution became, in a much larger project, the core. We basically have to do it in order to do the business. And in so doing, that process was taking what I'll just say incumbents who had a very specific view of the way to get this done, and we said, hey, maybe you want to think about it this way. And we gave them 3 different sort of scenarios, each one building up to what was articulated at the governor's level, basically. One of the most important factors was to achieve sustainability objectives.
Interesting.
And by the way, we save money.
Nice.
Yeah, that's what you can do both.
Well, what's interesting, what I'm hearing a lot here is, we've always heard that microgrids, if you've seen one microgrid is the phrase, right? Because they all tend to be custom in fashion. And we've heard that as a problem. That's a problem. We can't be replicable because they're all different. But it sounds like what you're telling us here is that, no, that's just part of what we do. We go to these situations that are all different, and we figure out what's needed, look at the individual circumstance, and then move from there.
Yeah, maybe you want to.
Yeah, I think the platforms are becoming replicable. One thing, this idea of energy as a service is absolutely a repeatable idea. The technology itself is as well. I think about, as we think about microgrid approaches to smaller buildings, this idea of building on open and interoperable architecture is really kind of unlocking the ability to create more modular, scalable approaches. And I think that really allows you to take it to a much lower energy intensity type consumer.
Mm-hmm. Interesting. Yeah. Can you? Oh, I'm sorry.
Oh, well, but right, that's the key right there. And I would say that view on the technological basis of what we're doing and the ability to recognize patterns in that way is invaluable, because it allows you to take a complex problem and say, okay, we're going to build 3 of these, 2 of these, 2 of these, connect them this way. Very few people can do that in the market, in my view, like Schneider can.
So tell us a little bit about, how you can scale this. Can you take this to, say, a company that has several facilities and bring this model to them? Would it work for them?
So I think each different market behaves differently. When you're dealing with things like airports and seaports, you create a beachhead opportunity where that credibility, and it is a complex situation because you're dealing with lots of different stakeholders. And that, again, is a differentiator in terms of Carlyle as our sponsor and capital partner, because they understand how to bring unions in and minority companies and their taxpayers in that region, and all of these things really matter. And then, the university environment we're seeing trends and patterns there. And so again, it's sort of creating, through the art of the possible, a mechanism where we can repeat that and improve on it, because the planning and the design work that our team and the Schneider team work on together from the day we started to now is becoming much more scalable and replicable.
One point that Karen made, I just want to emphasize, in everything we do in infrastructure, we try to do with the lens of creating jobs. Mm-hmm. Because there are a lot of things that need to be advanced in this country. Clean energy is one of them, jobs is another. Mm-hmm. And by the way, when you start to approach business issues with gatekeepers that care about that stuff, it just is it's an immediate other connection where they say, okay, we can now work on a variety of metrics.
So if you're working with the community and they're looking at clean energy, this is also a mechanism to bring more jobs to that community.
Yeah, and by the way, that might be lower returns for us, but that's all right.
Interesting. So I know you're a fairly new partnership, but are there any particular projects that you can tell us about yet, or?
None that we would be comfortable naming.
Gotcha.
But generally speaking, you've heard about airports, you've heard about universities, the industrial sector. So we're deeply involved in all of those. Did I miss anything, Don? No? Okay.
I think we're gonna get some lights on down in Puerto Rico together, so that'll be another
Yeah, a few
important
other
area for
things
us.
going on, yep. And, just going back to, this is an enormously, I don't think it's, any of the numbers I see, I think our market opportunity is much bigger. And part of that is, it's not just about microgrids. It's about delivering solutions to complex environments that eventually you're going to see interoperability. You're going to see munis, connecting the communities more at large. You're going to see universities playing a central role to go out to their communities and maybe into their hospitals, or addressing issues that are regional or local in a way where I think that that scale will happen. And one other thing, I was here for part of the last panel, and I think what's really interesting is ERCOT is its own market. It's unique, and that's where you can sell power in. It's a merchant model. It's a really great model. We love what Enchanted Rock is doing, quite frankly. There are 50 states in this country. If we're just talking about the US, which we're not, we're talking about global, although most of what we do will be North America. And again, having, 2 anchor partners that are global help to go into those markets. But in our own US here, we've got 50 different countries with different models and different incentives. And so that's another part of going into Massachusetts, New York, PJM, and coming up with solutions that are integrated solutions with capital and technology.
And the sausage might look different in each one, how you make it,
Yeah.
correct? Because you're
Yeah, but it's not rocket science. It's just...
But one of the things, just to be clear, what DEN is being set up to do is to be a permanent capital vehicle for this industry. This is not some short-term private. We're, of course, getting it kickstarted. But our goal for Dynamic Energy Networks is to be something that will continue to fund and develop microgrids with other capital as it goes, and just be a very long-term entity in the market. Okay. That's where we think the market's going.
Interesting, very interesting. So, Karen, you said something a minute ago about, you were talking about locations. And I'm just curious, is there a particular part of the country, though, that you really are focusing on?
There are certainly areas that I would refer to as low-hanging fruit. Massachusetts, New York, California, what did I miss? Sort of the New England market is very interesting.
Sure. And you end up, following the, some of your major customers as well, right? If you're a multinational company, you've got a portfolio, and you've got mandates, and that means that they might look at it like a portfolio versus only doing things in certain territories. So we'll see a more wide range across some of these larger enterprises as we help them solve their overall energy sustainability and resilience questions.
And that's a good point. From a portfolio perspective, what's happened, yes, and we have been in the market 6 months. I mean, it's a very short time. What we're seeing from a portfolio perspective, there are current assets that are already out there that are really well positioned to be upgraded to microgrids. And so we're in those kinds of discussions, and there are a whole variety of business reasons why the folks that own those or control those or operate those have an appetite to work with us, because they see the benefit of those upgrades. And it's an enhancement to their revenue streams and their growth objectives as well.
So are you referring to like generation assets that might be already existing?
Yeah, or CHP plants, or whatever it might be.
So they can form the core of the microgrid, makes it less expensive to get moving if you've already got that. Do you find that the market understands that? Do people get that, or do they think they have to bring in some, big new solar project and different?
I think the leaders understand it.
Good.
Yeah.
Great. Well, this has been a wonderful interview. Thank you so much. Anything else that the three of you would like to add about energy as a service?
Yeah, I'll just simply say I think that there is room for really everyone in this room. I look out the hallway, all the booths out there. I can see Schneider Electric working with every one of those companies to go and develop microgrids. Technology is moving very quickly. Business models are changing. I think there's room for all of us to go and collaborate on these things as we build this market together.
But that's an interesting thing about a microgrid, isn't it? That you often have to bring together several partners to do it.
Yep.
Yeah.
Right.
I totally agree. We have to do that, actually, in order to get this market to where it needs to go.
Does anybody want to take some guesses about when we'll see the microgrid market really fly?
I think it's going to, the thing about the energy markets that always happens, we saw this with the drop in oil prices and natural gas prices and the rise of the United States being the largest energy producer in the world, so it happens overnight.
Yes.
And when you look back at it, it's not actually happening overnight, but there are market participants moving and innovating, and then finally the market will wake up and things change. I think that's where we are. So I think there are microgrids being developed now. What we're seeing is, I'll just say when we started this platform 6 months ago, I had a number of people look at me and say, okay, microgrids, all right, so what is
Call them
that?
something else,
What is that? And now, every project we're involved in says, how are we going to create sustainability?
Interesting.
Every single one, regardless of the industry.
Very interesting. A lot of change in 6 months.
Well, maybe just our eyes are open, but or we started pitching it and people said, okay, great.
Yeah, no, that's true.
But I'm very optimistic. That would have to be
Does
it.
anybody want to throw out like a year? Like, no.
Nope, that's like predicting who's going to win the NHL. I don't know.
Gotcha. Good. Okay, good. Well, thank you so much. This has been a wonderful interview. Lots of great insight. Appreciate it. Let's
Thank you,
give a
Lisa.
hand to this panel here.